We're going to start with the first panel, and it's my opportunity to introduce Dean Harold Krent. Harold is the Dean of the Illinois Institute of Technology, Chicago-Kent College of Law. They are pioneers in thought leadership, intellectual property management, and markets. It's one of the few places in the world where you can go and get your master's degree in intellectual property management and markets. And they're going to start us off with a discussion of asset acquisition and divestiture, and a focus on the key issues for diligence and the key issues that drive that transaction. So again, on behalf of the Center for Applied Innovation, my partners at Ocean Tomo and colleagues, thank you all for coming. We look forward to engaging 2 days, and let's make the most of this and get to work. Thank you.
Good morning. I want to thank Chris, Michael, and Jim for the introductions, but also for the incredible Blackhawks victory of last night. And as Michael mentioned in particular, I think that the growth in IP investing is become very polycentric, which is why I'm delighted that Jim mentioned our master's program. But I'm also delighted for that because that's why this panel is here. They're here to talk about their experiences in first asset acquisition and what they've seen, who's doing it, what are the trends, what are some of the challenges, and of course the predictions for the future. So our first speaker today wears two hats. And that is Dan McCurdy. And Dan is both the chairman of Patent Freedom as well as the CEO of Allied Security Trust. With that, take it away.
Delighted to be here this morning. Let me say just a quick word about Allied Security Trust and Patent Freedom, because much of what I will do in terms of responding to questions you have will involve data that comes from the two organizations. AST was created in 2007 by a few of the world's biggest technology companies. There are currently 23 members. Two functions. One is to monitor all of the patents being sold around the world and to serve as an intermediary and allow the members of the trust to pool money together to purchase patents that would be of interest to them. Once we purchase the patents, we then license only those members who participated in that specific transaction. And we then sell the patents on the open market, returning 100% of the money that we receive back to the member companies to reduce the cost of the license that they take. Now, the side effect of that is that since the trust started in 2007, we have now seen more than 90,000 assets being sold in the open market. We have more than 800 brokers, sellers, lawyers, and others who bring patents regularly for us to serve as a conduit to get these patents into the hands of our prospective buyers. With that, we monitor everything that happens with those patents that can be publicly known, how often they're litigated, what happens with the patents, who buys them, and anything else that can be known about them. Patent Freedom is a completely separate organization and monitors all NPE and patent assertion entity activity worldwide, more than 700 entities, and more than 2,200 affiliates of those entities, as well as the operating companies, more than 10,000 operating companies that have been the defendants in NPE and PAE litigations over the last decade or so. So the data that I refer to is sort of a synthesis of the data that these two organizations collect through their operations, and that's what I'll refer to. I'm only going to make 4 opening comments. I'll have plenty of data if anybody wants to ask specific questions to back up any of this. First is, as I just mentioned, there's lots of patents on the market. Most of them are crap. Now, don't be surprised, of course, because most patent portfolios of even the best companies, I spent a lot of my career at IBM and at Lucent and Bell Laboratories, and as we all know, most patents are crap. It's not because people try and make crappy patents. It's because it's an inevitable part of the innovation process. They just are. Second one, on the rare occasions when very high quality assets come on the market, for example, the MIPS technology assets that we closed on earlier this year, Gail Schulman is here, who was general counsel of MIPS at the time, who we did the transaction with, among others. These kinds of high quality patents command a very high price. Rockstar is another example that John Veschi will speak about. The third is the relationship between operating companies and patent assertion entities and NPEs is enormously complex, not nearly as straightforward as people think. And in fact, the vast majority of patents that are litigated by patent assertion entities are sold to them by small and medium-sized companies. Large and small companies, operating companies. The fourth is the argument that poor quality patents is somehow the cause of all of the problems that we see and or the investment opportunities that we see in intellectual property is a complete red herring. It isn't about the quality of the patents. It's about the activities and the behaviors of patent enforcement entities, whether they're operating companies or whether they're patent assertion entities. And it's a problem with the U.S. court system. It's not a problem with patent quality. We know that there's lots of bad patents. There always will be, and there's nothing that's going to be done about that. With that, I will conclude.
Well, thank you. Our second speaker has sacrificed coming a long way under very trying circumstances to be with us tonight, but that is Peter Holden, who is Senior Vice President of IP. So from your perspective.
Thank you very much. So I've been in monetization for about 20 years and investing in IP for about 10. And what's been incredible is the prodigious growth of IP trading in the last 5 years. And it's basically down to three variables. One is obviously increased supply of higher quality offerings than previously. And part of this is C-level recognition in the boardroom. Another is the activist investors and corporations coming to appreciate more and more that IP is a large part of enterprise value and it should be unlocked in some way. A second point is that we're seeing much more demand and more buying options from the market pull point of view, from much better funded IP public companies to hedge funds, and a lot more interest from Wall Street, as Michael was saying, but also a lot more interest from Asia as they're looking to export out of China and Taiwan and therefore seek patent coverage for exports overseas. Great example being Huawei, for example. Also, a lot of US companies like Google and Facebook and others are becoming much more active in acquiring IP, as we know very well. So we've seen this 30-40% compounded growth of acquisitions in the last 3 or 4 years, more competition, more price inflation for higher quality assets. But what was interesting a couple of years ago is that we actually started to see secondaries opportunities, not just buying assets, but buying licensing programs and ongoing cash yielding opportunities. And we looked deeper into that, and we started to analyze about 30 or 40 licensing programs from NPEs and realized that like any industry maturing and growing up, there's going to be consolidation, fallout, and correction. And in our opinion, we're already starting to see that. And we look at some of the underperforming portfolios and programs, licensing programs, whether it's public companies or private initiatives. And we're seeing a very similar set of themes. One is first-time teams, inexperience. They may be very good at licensing a corporation, but they don't have the investment or business entrepreneurial expertise to actually run a licensing program. We see programs where they have all of their eggs in one litigation basket. There's too much concentration on one sector. And a lot of it is actually hauntingly similar to the secondaries market in private equity. I used to run the IP investment group at Collar Capital, and they were very preeminent in doing secondaries. And many of the same structural problems that happened in the boom-bust cycles of private equity, we're actually starting to see in IP monetization as well. But what will happen is we'll see preeminence rise to the top. We'll see, in our view, a few highly regarded NPEs, patent association entities, that are better financed, have more diversification, they'll cross sectors, they are multi-strategy, not just litigation, but more nuanced approaches to licensing and sales, backing operating companies, and they will have portfolios of holdings rather than highly concentrated one-trick ponies. So we are, as an investor, we're looking at these secondaries opportunities, and we're also looking at ever-increasing supplies of corporate portfolios, probably more than ever before.
Well, thank you, Peter. Our final speaker this morning is John Veschi, who, as many of you know, is a rock star. But he's not only CEO of Rockstar, but before that, it's important to know that he actually worked for Dan McCurdy at Lucent. So beware of your more humble beginnings. But with that, go ahead, John.
Thanks. Jim told me yesterday that very few of the people in this audience are actually lawyers, and that was one of the things he thought was a good thing about this session. I happen to be one of those few, though, and in the context of talking about these topics today, I thought I'd bring the few of us that went to law school back to first-year property class, and for some of the others, just give you a little bit of flavor of what happens when you first show up in the first day of law school and you go to property class. You'll have a teacher, and I remember in this case a he, who starts out the discussion with what is property? And then, as many of you know, the Socratic method of law school never actually answers the question, just asks a bunch of more questions. But at the end of the session, you have this metaphor that property is called a bundle of rights. And they, you'll have a picture on the board. In my case, it was a chalkboard. But a picture on the board of a bunch of sticks with a string around them or tied up together. And property is all these plurality of sticks that are all coupled together. So IP, patents, that's also a bundle of rights. Each patent has a bundle of rights, and they can be strong or weak. They could be things that you still maintain or that you've given up. And then a portfolio of patents is just basically a bundle of a bunch of bundles. And that's, people who work in property, that's the way we tend to think of it from a legal perspective. Now, the reason I'm bringing that up is because in my case, if you look at why I went to Nortel, I was running the licensing business at Agir Systems, the Lucent micro spinoff, after I worked for Dan. And then I was running the licensing business after Agir and LSI Logic merged together to create LSI. And Nortel came knocking on my door summer 2008 and said, we need to create a licensing business like the one you've been in. We see that ALU, how they're doing well. We see Ericsson, how they're doing well. We think we're at a competitive disadvantage. We don't have that revenue stream that's coming in from all of our IP that we've created with our similar fundamental R&D. And I wasn't like looking to move to Canada or go, join Nortel. I didn't really know much about Nortel. So initially I was skeptical, not that interested, but I took the time to diligence the opportunity and went up to Canada, looked at the patents, met the folks, and I came away with a conclusion that might not have been intuitive if you just looked at it on its face. If you look at patents sitting next to each other, they all look the same. It's hard to really tell one patent versus another, which is the really good ones. As Dan mentioned, there's a lot of crap out there. But so I started looking at the patents, and I said, okay, these are what I would consider Bell Labs quality patents. They were a lot like the ones I got to play with before. They're based on fundamental R&D. You could see that people were opening doors for the first time. They were facing problems for the first time. And of course, that makes you feel really good about the pedigree of the IP, that it's going to be somewhat bulletproof from an validity perspective. But okay, big deal. Lots of people have really good patents. What really set the hook in me was the opposite side of the equation, which is the encumbrance side. And unlike at Agir and LSI, where I was dealing with the AT&T agreement and then the Lucent agreement, then the second Lucent agreement, and then the first agreement, there were all these agreements that we had going back to 1990 because of the success of the licensing program that Dan and people before him had run. Nortel had virtually none of that. So if I looked at my Agir LSI world, when I would be out asserting patents with my team and we're trying to create licensing deals, you guys could all intuitively understand the reverse engineering part. You try to put together claim charts. You try to demonstrate your claim charts to the other side. Show them that they infringe. Show them they come back and say, I don't infringe, the patents are invalid, and we have that battle on the substance. But it was almost equally weighted as to how much battle we have on the licensing. Because this company is a successor to that company, or we bought that company over there, and that company had a license. And you'd be sitting there struggling strategically. Are they licensed or are they not licensed? Where are they licensed? Which part is it? And it felt like the encumbrance map and figuring out the strategy around the license side was just as challenging. I mean, it's fun, but it's challenging. Just as challenging it would be on the technical and substantive side. So I looked at this Nortel thing, and it was like, wow, this is unbelievable. It's similar kind of patents, and now I get the chance to start all over. I get the chance to hit the reset button and wipe away the analog of all those agreements, because in many cases, when you have agreements done every 5 years, invariably there was an agenda when a certain agreement was done at a certain time, and there's terms in it that you're looking at now, and maybe it wasn't because they did something bad then, it could be because the law changed in the meantime, but whatever, you look and say, if I had a chance to wipe that agreement out, we'd be in a much stronger position. And so then what was attracted to me with Nortel was to come in and be able to establish a licensing program in an area where the entire industries are completely unlicensed, and then do it the right way all along. Now, why I'm sort of setting that predicate is I think that's kind of the hidden story behind the success of the Nortel sale is the powers that be. The conventional wisdom was maybe the Nortel IP, as we're selling the businesses off in bankruptcy, maybe the IP might be worth a few $100 million, maybe as high as $1 billion if you had the gumption to actually suggest that. But what my team and I spent a lot of time trying to educate the buyer market about was the lack of encumbrances. The fact that this IP, even though it might on its face look the same as an IBM patent, the same as a Kodak patent, the same as an ALU patent, there's a big difference. There's not this big pile of license agreements that's out there that are sticks in that bundle of rights that have been pulled away. So this bundle is a really full fat bundle. It's not a skinnier bundle where all these things have been taken out of that bundle of rights. So I think that's, as people look at IP, look at patents in particular as an asset class, that's sort of the hidden variable that people need to keep in mind.
Thanks, John. And I want to start with sort of mega trends by thinking about acquisition activity. And Peter, you mentioned that there's been a growth trend of about 30-40% over a number of years. So what's your prediction? Are we going to plateau? And if we plateau, is that based upon market forces, regulatory forces, or something unknown?
I think there's always going to be the next big sector. So while things have stabilized in LTE, for example, as the ecosystem wars played out, you have other sectors where there's very high growth. I mean, we're selling a OLED portfolio, next generation display, and an FED portfolio, and there's tremendous trading velocity and interest in that area because it's all about constant innovation, preservation of margins on these low margin products. And similarly, other sectors like mobile payments and a system on chip, FinFET, so, and medtech, healthcare IT, remote monitoring. So there's always going to be a sector where there's a rush to get in. And we're seeing really healthy pricing in some of these sectors, even before the market has been established, because of the rate of innovation is increasing, nonlinear growth is increasing, and therefore there's an imperative to get patent protection sooner and quicker, even before the markets have reached a critical mass. So we're very upbeat about it. The key is to understand when to move on to other sectors and not just flog old stuff where the market is played out and there's less demand for that IP.
So the overall IP picture is rosy, but individual sectors may not be. Dan, any reaction from your studies that you mentioned?
Yeah, so let me just run through a few numbers because this is something I think the numbers actually matter. So if we look at 2007 all the way through 2013, in terms of the assets, both the numbers of what we call lots that are received from a seller. Lot can be, on average, it's approximately 10 patents over time. So if we look at that, and those that we have reported back to our members, I'm just going to run through the numbers of lots that we've released, and then I'm going to run through the numbers of actual assets, because it's really quite telling. So 2007, I'm just going to go through year by year. 184, 576, 854, I'm just going to do in round numbers, 700, 700, 900, 1,300 lots. Now let's go through the number of assets. 2,000, 7,000, 10,000, 8,000, 7,000. Now in 2012, 12,000. And in the first 2 months alone of 2013, we saw a total of 8,000 U.S. patents alone in the first 2 months, which would put us at a run rate this year of nearly 30,000 patents, U.S. patents alone being offered with AST as a potential purchaser. We've also seen a fairly significant shift in the types of patents that are being sold. Virtually, the vast majority, greater than 90% of patents being sold are high-tech related patents. They're not automotive, they're not chemical, they're not, pharmaceutical. They're high-tech patents. That's what's being sold. And of those, we're seeing a shift away from what has always been semiconductor-related patents as the highest percentage of the kinds of patents that are being sold. Communications patents, high on the list. Computing patents. This past year, for the first time, web-based patents have gone to the number one related type of patent, and we rank these by classification and category through every kind of high-tech patent. So we are seeing a big trend in uptick. But as we've said, and I think we're all in agreement, most of those patents are junk. And the challenge that we have is figuring out what we do with respect to all of those junk patents, any number of which could be sold to patent assertion entities, as I said earlier, that now represent the vast majority, more than 60% of litigations in the U.S. What we do with respect to those, and buying them all, in my view, will do absolutely nothing to slow the pace of litigation or assertion in this country. Absolutely nothing.
Well, it sounds like you want to get into litigation, to go back to John's old legal stopping grounds. But in terms of the NPE or the PAE the assertion of rights, and you suggested that is that a long-term foil in the growth of IP, or do you think that market forces will stabilize the assertion in that sense? Or is that, as President Obama just mentioned a month ago, that we will look for legislative change in order to curb at least the amount of some of the litigation? Any views on market, regulatory, or the financial health because of litigation?
Well, I mean, from our perspective, there's absolutely no doubt there's an increased negative sentiment towards NPEs, PAEs, and it's getting harder, it's costing more, there's more uncertainty on outcomes, and the margins are diminishing. But there's money out there, and there's very, very smart people, and so as I alluded to in my kind of introduction, people will retool and re-equip themselves. And whoever is prominent and preeminent in 5 years' time as an NPE may look completely different than what we see now as an NPE because of that constant iteration and evolution in reaction to changes in legislation, but also in anticipation of where the markets are going, where the new buyers are going. Maybe in 10 years' time, most of the IP that's traded is Chinese. It's not, who knows? But that flexibility and innovation is key to seeing this market grow and unfold over time.
Yeah, I think Dan mentioned earlier in his opening comments something about it's more of a litigation problem, it's not an IP problem in some ways. And that's what I see if I look back over the last 20 years or so, how the market has evolved to one where the litigators used to be somebody who was kind of in the back room that you'd pull in once in a while when the negotiations got to a point where you needed to have litigation, to now they're in the center of the stage and everything revolves around the litigators. And, most people don't intuitively understand that there's only roughly 100 cases a year that actually get to a jury trial. It's a very, very small number of patent cases that get to trial, yet everything that a lot of people do is metered by what might happen in front of the jury. And the analogy I think of as I'm dealing with people, trying to deal with them in the boardroom versus the courtroom, is to say, look, if there were two married people and every comment they made was gated by their divorce lawyer, do you think they're going to stay married very long? I mean, everything they're going to think about is how's this going to look in divorce court? So I don't know how we get away from where the paradigm has shifted to being such a litigation-centric situation. I'm hoping that with some of the activists and everything else that are involved here now, we can get it more into the C-suite, more into the board, more into trying to work business deals as opposed to being everything litigation first.
But just to respond, are you suggesting that this is going to just a natural market evolution, and that there will be different strategies to be used by companies to minimize the role of litigation, and that we're just seeing a lag, or do we need regulatory change?
No, I don't think it'll just be market forces. I think when I look at loser pays, for example, the SHIELD Act and things like that, I don't like the SHIELD Act as it's written because it discriminates against certain parties versus others just based on how, some panel is going to decide whether you're an NPE or not an NPE. That seems kind of odd to me. But the idea of loser pays, I've always been a big fan of because I've always been fortunate to have really good patents. And if other people are taking advantage of the system as it is to use the courts to their advantage, they get in my way as much as they do in the way of the licensees.
So you want them to have some of their own skin in the game the way it is in Britain?
Well, yeah, I think if the person I'm trying to negotiate a deal with had the loser pays issue as well, and if the people who are clogging up the system had loser pays filtering them out, it would make things way more efficient from my perspective. Totally. And I think we'd have less litigation-centric environments because of that.
Although it's interesting because My guess is that if you asked many influential operating companies whether they would want to move to a loser pay scenario, my guess is they would oppose it. You know, the interesting piece is, you know, there is this dichotomy in behavior. We don't like NPEs, we don't like PAEs, but we sell to them all the time. We don't like having to go to court, but if loser pays, you know, can you imagine the amount of money that is spent between two operating companies? You know, I have no idea what Lucent, Alcatel-Lucent and Microsoft each spent on that 7 or 8 year long litigation, but my guess would be $50 to $100 million apiece, each on legal fees alone. And if that's the case, do you think either one of them would actively sign up for a change in the law where loser pays, right? Where the cost of litigation could be $200 million?
I think it depends
at the whim, some would say, of a jury.
I think it depends on whether you look at it from the micro or macro level. If they step back and say, if were there loser pays, we wouldn't have spent that $50 to $100 million because we would have been motivated to get a deal without going to court. I mean, the problem, in my view, is that all that money spent on litigators is just money that's sucked out of the system. It's not something that can be traded and bartered. It's basically a big tax that if you could figure out a way from an ecosystem perspective to get rid of that or minimize it, not ever get rid of it, but make it the exception, not the rule. I think it's better for everybody. So I would think if they step back and say, not just on this particular case, it's got to be decisions that's made at the entire level. That why would you not play into that?
I don't know. I will only say what I said from about 1987 to maybe 92 when I was IBM's intellectual property lobbyist in Washington and around the world. And what I would say is the easiest thing in the world to do in Washington, D.C. is to stop a piece of intellectual property legislation. The easiest thing to do. And the hardest thing to do is to pass one single piece of meaningful IP legislation in Washington. And I think that's what we see is a lot of meaningless, for the most part, meaningless IP legislation being passed. All the tough decisions are constantly deferred because there is no agreement among industry. And if there's no agreement among industry, you certainly cannot ask a member of Congress to figure out what industry can't even figure out for itself.
Well, that's probably a good time to open it up for questions. As Jim said, this is about engagement. What's on your mind and what can our panel help you with?
So what I find fascinating is your expectations of what will happen. And, 3 to 5 years out, where do you see this market? You've talked about certain elements of it, whether we'll have large or a large number of many. But how does that relate to the loser pay options, your crystal ball of what's going to happen in Washington? Because you're planning your businesses based upon that 3 to 5 year vision. And I think we'd all be curious to know exactly what you see that looking like.
So maybe I'll start since you want to get me involved. I think what I like about this conference, and as I see the evolution of the industry, is that we have folks like the activist investors here. And I think about when I joined Nortel, how little Nortel knew about its IP portfolio, and how little the C-suite knew about the portfolio, how virtually nothing the board of directors knew about the IP portfolio. There was no forcing function to make them even care about it. So I compare and contrast an environment where they're trying to hire me to come in and work for the general counsel. So the senior guy that's going to know anything about IP is going to be the guy that works for the general counsel. And I look at in the finance space where you have a controller, you have a CFO, you have a outside auditors, you have the audit committee, you have everybody looking, okay, we carried the one, got it, all right, I see how that all works. And nobody's looking at these assets that were worth more than the rest of the company, all put together. So as I look at it systemically, I think what makes me optimistic about the future is that there's a forcing function coming into the market, and it may be late relative to those of us who have been here for a long time, but it's a forcing function coming in to force the boards, force the C-suite to at least recognize IP might matter here. And if it matters or if it doesn't, articulate a vision as to why it does or doesn't. At least think about it. Put it on the agenda. Have somebody, I don't think there's really the equivalent of the audit committee yet. I don't know if I've seen a board that has an IP committee, but you would think who's holding the CEO or the C-suite's feet to the fire to make sure they're actually doing something. It doesn't have to be that you build a licensing program. It doesn't have to be that you sell off your assets, but there ought to be some intelligence given to it. And I think that is coming. And as a result, I think there's going to be more of a supply of creative ideas, more of a supply of outside the box thinking of what should we be doing with the the IP, whether it's patents, copyrights, trademarks, or anything else, that we happen to have the privilege to manage and husband. Because up till now, I think Nortel's the poster child for, I'll give you a little bit of an anecdote. Even in the middle of bankruptcy, we've sold some of the businesses. We're looking to sell the patent portfolio. We've decided that that's probably what we're going to do. We're looking for a new board member. We have, I think, 5 board members. One's leaving. We're looking for a board member. And I'm on the phone, and I know there's 30 some odd people elsewhere on the call in Toronto. And I have the audacity to suggest, well, maybe we should get somebody who understands IP. And the laughter on the phone, it was like, you propeller head, go sit in the corner. We don't want to hear this. It was just it's stunning to think about that. But I see now the evolution of things, and I think we're still at the first or second inning of this. I can't imagine that this is a bubble or a bell that's about to come down. Because we know the pent-up value of these assets. Again, not saying it's one-size-fits-all approach for them, but you ought to have some intelligence about what you're doing.
Reactions?
I don't expect any great help from certainly from the Congress to deal with this issue. As I said earlier, until industry agrees with itself, the Congress certainly isn't going to fix that debate.
What scares me there, though, is it seems like the one thing they can all not understand collectively is IP.
Well, I think, but that's not unique to the Congress, right? And it's not even, frankly, unique to operating companies. My prediction is more of the same, very modest kinds of evolutionary changes, more of the same. If there is a fear that I have, and it's one that I think about a lot and have been thinking about since the day that the Round Rock transaction, where Micron sold, handfuls of thousands of patents to John Damaris at Round Rock Research, is that this kind of what we call privateering, some of the world's biggest companies, all of which have patent portfolios that are far, far bigger than what they need for offensive or defensive purposes. Many of them could split it 5 ways, as we did, John. Remember when we spun off 7 pieces of Lucent? The rule that we said, I said one rule, and the rule is when we finish splitting this patent portfolio apart, which was about 23,000 patents, we will have as significant an offensive and defensive patent portfolio left in the parent, right? Even at the pain of the children that we're creating, we will have just as much, and they will each have significant offensive and defensive portfolios. And we created that. Well, what if that suddenly happened among tens or even hundreds of companies with portfolios of this size, where they're split up, and when they're split up, they're sent off to this PAE and that PAE and this other one, and pieces sold off to other companies and so on. And what will that start? Right? You have this massive increase. Could be tens of fold increases in the numbers of patent assertions with some of the world's highest quality patents. Well, that would be tremendously destabilizing.
Unless they all cross-licensed each other.
Well, unless they all cross-licensed each other before it started, or that started a massive cross-licensing. But, that's the great news, is for every action there is always a reaction. And who knows how it will play out. But that is, if there's any fear I have, the NPE thing, whatever, it's going to be what it is. It's like a mild case of diabetes in my view. It just kind of goes on. It isn't going to kill you. You just have to make some lifestyle changes. But that one could be very, very dangerous.
But I could rephrase your fear as, your fear is that a whole bunch of assets that are currently undervalued are going to be properly valued. And why is that a bad thing?
Well, I'm not saying that it is a bad thing. I'm simply saying that it would be enormously destabilizing to the industry. And how the industry will react to that is another question, but it would be a monumental shift. Think about it. 10 new of every kind of companies suddenly created, each one at war with the other one. Now, what is it? It's a litigator's dream. It's 10 more beach houses for every partner, every litigation partner.
Unless the litigation ecosystem is reformed. And that's where I think the focus should be. I'd rather see that world where those are then bargaining chips at the table, as opposed to things that are going to be litigated.
Go tell that to the patent, to the patent bar. Go tell that to both plaintiff and defense bar, each of which they're making 70% of the money that's being paid by operating companies in every dispute. 70% of the money is going to law firms. Now, which one of those want reform?
Well, that's what I'm saying. They're in the center of the stage, and they shouldn't be.
Understood.
Yeah.
Well, I should just take off my hat briefly. I think there's another systemic problem in litigation, which is we don't have a loser pays rule except in civil rights statutes, for those of you who don't know, and that's because we believe that there's a fear of the bargaining power between the big and the small. Mm-hmm. And so here, as you said, some NPEs are small. Maybe they can't survive if there's a loser pays. Some NPEs are large in essence.
Yeah, but if
so how do you divide
if the patents are good, the capital's out there. That shouldn't matter at all. If it's crappy patents, yeah, then you shouldn't be in the
It matters
system.
politically, because once you say you go this way, what about malpractice actions? What about, and you go down the road.
But if the politicians knew who was in this room or who else might be in the wings that could be in this room, they know that anybody who's got decent patents, whether you have the balance sheet to back it up or not, you could find the funding to back it up. If you have crappy patents, you can't. But if you have good patents, you can. So I don't think that would keep anybody away from being able to assert good quality IP.
Well, unless it's marginal. Okay, questions?
Yeah.
Yeah, I just want to try and, I don't know if you can hear this, just sort of extend the debate a little bit, because, Dan, I hear, and I don't mean to put words in your mouth, but a little bit of a strong argument against a third of the universe that asserts, and those are the nasty green mailing NPEs. But in fact, we have the privateers, corporations that are large with dirty hands, Goliath versus Goliath, that are as responsible for a lot of these maladies as anybody else. We have the small inventors that large corporations do run roughshod over. But if you look at the volume of the debate, it's all weighted towards these small diabetes guys, as you describe them. And frankly, I wonder if you didn't propagate that disequilibrium in the debate. And I wonder also that due to the nature of intellectual property and how it captures value in unique ways, that I don't know that we might not be forced to recourse in courts, because these are strange rights that need to be sorted out in strange ways that have unique stores of value. And there's going to be fights over them, and it's part of the brave new 21st century economy, because these are hard assets, difficult assets, I should say. And so I'm just wondering if a lot of this hue and cry that I believe is disproportionately brought by the large corporations who find it easy to take IP and not pay for it, doesn't accurately reflect the debate. And I'm just curious for everybody's thoughts about that.
From my perspective, there's a huge amount of rhetoric. There's an element of a witch hunt going on in D.C. It is the Wild West out there. And so you do have elements, fringe elements, that deserve all the criticism, and then you have others that are on the more virtuous side of this. It's all, and we don't file a lawsuit without the corporate owner of the patents as co-plaintiff. So we're an outsourced licensing function. We're creating and unlocking value for the corporations. In other situations where the NPE owns 2 patents and files suits on very marginal business processes, yes, that is all the criticism they get is warranted. So we're trying to summarize an industry that's in tremendous flux and change, and we also have other jurisdictions becoming more preeminent, like Germany and the UK, and goodness knows where China and Singapore will be in future. So all this is going on, and we crystallize a thought, and the industry's actually moved on since then. So we're in kind of a lag. So in all this maelstrom, there's people making money, and there's people creating value, and that will continue. And if it does become too adverse in the USA, we'll move elsewhere, or we'll adopt other strategies. Litigation is just a tool in the toolkit for us, just one tool.
So, Michael, I think to a large extent, I actually agree with you. I don't think that there's certainly nothing illegal about small entities enforcing their patents, and there's nothing that's illegal or necessarily even improper about large patent acquisition entities enforcing their patents. Now, you mentioned that the large operating companies are not blameless. Here's the latest based on the reassignment work that we did. 68% of the patents that were purchased that are owned by patent assertion entities were sold to them by large operating companies. 25% were sold by small operating companies. 4% from inventors, and 3% from universities, R&D institutions, and so on. So in other words, 93% were sold to patent assertion entities by operating companies. Of the litigated patents, 39% of the patents litigated by PAEs were sold to them by large operating companies. 44% by small operating companies, 13% from individual inventors, and 4% from universities. So there is no blamelessness here, right? This is we've got an asset, we want to try and do something with it, but which one of us doesn't want to have our cake and eat it rather than have it thrown in our face? And so we clearly have that, that reality that's here, and frankly, as I said before, it's the only real visceral complaint I have against NPEs, and I think much more NPEs than PAEs, but there may be some, is that the level of experience that many of them have is just astounding in terms of what they're doing. When we were at Lucent, we had a fundamental rule. We wouldn't even begin to think about an assertion against anyone where we couldn't see at least $300 million over the life of the patent, $300 million worth of impacted revenue. I wouldn't even think about it when someone would bring it to me. I was on the phone the other day with some poor little company. I can't do anything for them because they're way too small to be a member of the trust. But they have less than $100,000 in U.S. revenues, and they're being sued in a U.S. court by an NPE. What is the point? Did they never fish when they were young? Right? You don't go after the minnows. Wait for them to grow up. Deal with it later. And that's the kind of maturity, the kind of evolution that's going to ultimately have to go on. And from an investor perspective, I will tell you that if you're investing in someone who's targeting those kinds of immature companies, that is the worst investment you will ever make in your life. And when you lose it all, I will come and laugh at you.
Yeah, but
and you will.
I would still look at that as a corner case. I think when you look at the typical licensing negotiation, it's usually bigger companies that are the potential licensees. And I think the dialogue, and Dan has helped do this, I think to a degree, and that's part behind Michael's question, is that the assertion guys are considered the bad guys and the operating companies are considered the good guys, almost as by definition. But I deal with a lot of potential licensees that really don't seem to act in good faith. And we were talking to the FTC back. They had this workshop in December, and then we went down and talked to them one-on-one. I think it was in January, February, and I put up a view graph that said FRAND, and I said FRAND equals fair, reasonable, and non-discriminatory. FRAND does not equal free rider and no dealing.
Right, exactly.
And that's what I see from these guys, is they want a free ride on the work that other people have done, and there's people whose business models are, we're not going to be a pioneer, we're going to be the people come later, and we're going to be more focused on other parts of the ecosystem. They're fine, but at least be willing to pay the tax that you should pay to the guy who did all of the fundamental research. And instead they're saying, well, no, I'm an operating company, and in our case, and this is part of, again, what we shared with the FTC, is it seems kind of wrong to me that we went through this bankruptcy process, we did all the right things by this portfolio, we brought in $4.5 billion that now is going to the pensioners, many of whom were the inventors behind the patent, so there's a bit of a virtuous cycle here, and we go from being, on one day that people are being applauded for doing the right thing, and on the next day, you're a troll. And it's like, well, how did I become a troll? It wasn't like I came to Nortel to be a troll. I came to Nortel to build a licensing business there that was going to help save the company, a la, Qualcomm or TI or something like that. But it just turned out through circumstances beyond our control, that's what happened. But it wasn't, and I've also mostly been in operating companies, so I think I have a pretty good, balanced view. But you see these people who are the operating companies, are the free riders, and all they want to do is call names. They want to call you names and just say, you guys are bad because you have the audacity to assert your patents that I happen to be using. And it's like the good guy, bad guy, or that you can have scruples because you're on one side and you can't on the other, to me is ridiculous. And that's why I like the loser pays thing, because at least, and I could be idealistic here. I could be completely wrong. And there's always secondary problems or unintended consequences. But I think the system should have something that forces the people who are using the technology and know they're using the technology to have a mindset that is something other than I'm just going to infringe until they sue me, until they win, until they get through appeal. I'm not going to take them seriously until they go through all of this gauntlet. And I think that's how the way a lot of them operate. And I don't think that should be reinforced and applauded.
Yeah, I'd just like to say there is a lot of hypocrisy. I mean, we are approached very, very often by large operating companies that even have lobbyists in Washington, and yet come to us saying, we want to give you capital to buy a body of patents and tax our competitors. And so that goes on all the time, and we turn it down 99 times out of 100 just because there's no returns model for us. It's cost plus, which just doesn't work for us as a capital and service provider. So, but it goes on, and this kind of black op activity is increasing all the time as well. So, yeah.
I think you should get a question from a non-Ocean Tomo person.
Absolutely. The final question, and it must be a non-Ocean Thermal question.
So, Ria Chaman, Intellectual Ventures, non-Ocean Thermal.
At least for now.
Hopefully. So, question for Dan. You spoke about volume trend. Can you talk about asset price trend, min, max, median over the years?
So just to make sure I understand the question about pricing.
That's correct. What is the trend in asset price that you're seeing on the market?
Well, I mean, this is one of the great questions. It's one of the reasons why we'd love to see a lot, more transparency in transactions, because we see what we do and we see the very, very small percentage of what is reported. From our perspective, we rarely buy junk. And a lot of the junk goes unsold. Junk, if somebody just wanted to go buy it, $30,000 to $50,000 for a U.S. patent, for a patent family, U.S. patent and its counterparts. On average, we're still seeing pricing of $200,000 to $300,000 per U.S. patent family for most patents. And yet, for certain portfolios, think about the MIPS portfolio that we purchased, less than 500 patents. We paid $350 million for it. And you can be certain that of those patents, there was a very small number of them that really mattered. So what would that be on a per patent basis? A lot. What was the Nortel? Look at the Nortel. I mean, that was the perfect storm. I don't think that'll ever happen again in my next 5 lifetimes. But it was, it was an enormous amount, particularly if you think about probably less than that 5% of that patent portfolio was good. That's. It's not, I think I'm not seeing it go up or down. I'm seeing lots of crap. And on the rare occasion when something good comes along, the price hasn't changed very much over the past few years.
Let's thank the panelists.